In our stock debate today, the question we're asking, Asian Paints has hit a fresh record high. Will you buy the stock given further fall in crude, or is it too expensive now? Two gentlemen join in. JIGAR, SHAH and PRAKASH DIWAN join in on the show today. Gentlemen, afternoon to both of you. Prakash, I want to start off with you. There are strong tailwinds for the company, in the form of a demand recovery and extremely benign raw material prices. But at 40 times FY15 price to earnings, is this a company that you can still buy?
Well, according to my estimate, it's about 44 times in today's price, which is even 10% higher than your number. And I can tell you what's happened is, during the last quarter, people were taken by a little bit of a misled number on the margin side. They showed some reduction in margin, but it was more because of the A&P, the advertising and promotional expense being extremely high, being the season of the Diwali was much earlier than earlier years. So what happened is there was a feeling that the company is not doing well. So one is you had a rebound of sorts in that, the feeling of catch-up happened. And then of course you had titanium oxide as well as crude both coming down dramatically. But my sense is 765, 770 is probably where Asian Paints would have to kind of take a pause, take a stop. Until we see that actual demand recovery translate into sales, I don't think it's justified to keep on buying it at levels beyond that.
Okay, Jigar, what about you? What would your argument be on whether to buy Asian Paints or not?
Well, clearly, I think near-term valuations do not justify buying by going by any conventional wisdom. But if you look at the next, say, 2-3 year time frame, and the company's potential to perform in an economy, let's say, which may be growing at 6% or more, versus an economy which was growing at, say, 4.5% or 4.7%. So that will be one major factor of change in demand. Second factor will be, of course, on the margin front, because of what's happening to the crude, and effectively that will change some sort of raw material cost for Asian Paints, and also a lot of margin that they can retain with them. So from a 2-3 year point of view, if I'm looking at, then yes, it makes sense to continue to invest into the company. But from near-term point of view, definitely one can probably wait for some sort of market reaction or overall correction in the stock, and then take a position.
Prakash, lots of people chasing value, chasing multi-baggers, and some of the criteria they lay out for us is a company with great brands, so great brand equity, a company that's playing on the consumer theme, and a company that's great, very well managed. And then P's completely go out of the window. So could Asian Paints be falling into that category? So people looking for multi-baggers, liquidity could just push this share up without seeing any kind of correction?
No, really, you're right. I mean, that's exactly what we are experiencing with this stock. A couple of weeks back, I had also talked about this as a good buy, but that was way back at 635 kind of levels. Now, what clearly happens is the premium that you want to accord to a stock like this, thanks to not only its brand, but look at the financial, the ROE, ROC at 37 and 47 respectively are mouth-watering. And in a business which is extremely competitive, mind you, it's not so easy to kind of have pricing power in such a market. And they've managed to do that as well. So yes, you would want to have it in your portfolio. You would continue holding it onto your portfolio and feel good about the kind of rise we've seen. But the assumption that crude would continue to fall even further down is a little bit of a iffy situation. And whether Asian Paints can expand its overall top line also is something that would yet to be seen. So yes, it has its premium, and I don't deny the kind of premium it deserves. But beyond 770, as I said earlier, it starts getting to be a little bit of a stretch.
Okay, but why would you believe that the top line growth can't be assumed right now, or this pace of growth can't be assumed? Because think about it, I mean, we do have this whole government smart city program that is going to be unveiled. So a lot of analysts have been indicating that because of the increased demand in the decorative segment, because of how underpenetrated it is, the revenue profile for the company could change, maybe not now, but over the next 2 to 3 years.
Yeah, absolutely, Sonia. So that's what I said. You'll probably see a little bit of a troughing out of the kind of top line growth for the simple reason that the price points that this company function is, it's slightly on the higher end. And when you talk about the kind of new wave of affordable housing and smart cities that we would see, I would believe that it will be quite a little bit of market share that the unorganized segment and some of the lower cost players, the guys who are more active on the lower price point like Shalimar and all would probably benefit also. So there's going to be this whole rush for orders from some of these new initiatives, but it's not always going to be on the premium decorative side. And mind you, Asian Paints has been slightly struggling on the industrial side, which I would love to see that change. If that contribution increases into slightly, in the mid-20s as a percentage to their overall growth, I think that could be fantastic. So I would definitely love to buy it, provided some of these headwinds start getting slightly sorted out.
Okay. Jigar, is there a bit of a scarcity premium as well here? Because look, this is a company which has never diluted equity. It has 53% promoter shareholding, 18% FII, 9% DII. So there is a bit of scarcity premium for a stock like this.
Certainly, I think that is a major factor here, because I think the large foreign institutional investors who own the stock, and even for that matter the large Indian institutional investors who have a longer term 3 to 5 year outlook, they always like to invest a business which is dominant and also has a very proven track record in terms of management quality, balance sheet and everything. And Asian Paint is one of the best companies which one can own. So in that sense, clearly there is a scarcity premium, and that premium can sustain. We have seen that in case of various multinational companies in the FMCG and pharma sector, and also some of the Indian companies which have managed to do that. That's something which is very much going to be the case with Asian Paints as well.
Indeed. Prakash, this expensive stock argument has not worked out with most of the stocks actually. It didn't work out with TCS. It didn't work out with Sun Pharma or recently, when in 6 months it added 50-60% market cap after being described as the most expensive pharma stock. So is there a chance that it doesn't work here as well, and the stock just keeps going higher?
So, I mean, given the kind of momentum that we are in, Anuj, I wouldn't rule that out. But, if you were to find a method in the madness, yes, you would need to kind of let the company also demonstrate or justify the kind of numbers that the price multiple that we are willing to accord to it. Yes, the only way Asian Paints could do well is if the other companies don't match up to the expectations that you have. As you said, there are not many players in that space which would have this direct benefit. It's a absolute direct proportional run on the bearish crude trend that we see that Asian Paints could benefit. And if they are able to maintain that pricing power, 2% is what they increased last time without even a whimper. If they were to do that to about 5%, you could have an EPS that could really move dramatically on this small face value. So I agree, there is a possibility, a very strong possibility, but I would, as I said, want to evaluate that at about 770 and see if the quarterly numbers justify that, and then maybe you'll buy it at a higher price at 800 plus if things look really positive.
Okay, so Asian Paints looks very expensive at this point. That point is established. But what about some of the other paint companies, Berger Paints, etc.? They've been reporting good numbers. Prakash, would you buy anything outside the heavyweights?
In fact, related to paints and this whole correlation with crude, there's a couple of companies that we tend to miss out on. There's one very uncelebrated company called Apcotex Industries. Of course, the connection between Asian Paints and Apcotex is also known, but it's in a slightly different segment of synthetic latex, which goes into a lot of other industries, including paint. And that is one area which is benefiting from the crude softness dramatically. And the companies have started getting a lot of pricing power. It had its issues in leverage and all of that, which have started getting sorted out. They're one of the largest players, with BASF and Jubilant being the other ones. I think people need to also look at the kind of secondary beneficiaries out of this crude thing, apart from just the paint industry. So I would really start digging for value out there, and I think there's enough value out there. You could look at a target of about 525, 530 for that company as well.
Okay, that's a very interesting.
So let's get a final technical word on that. Rahul, if you're with us, can you tell us about your view on Asian Paints? How does it look in the charts?
You know, the stock actually run up quite a bit, so I kind of feel that the upside is a bit capped, but yet at the same time, you know, at this point in time, we are looking at targets of about 790 to about 800. So, you know, we're pretty close, you know, to those levels. So at this point, it's not a fresh buy. So I tend to agree that, you know, one should look at other ideas.
Okay.